Hello, my name is Aaron Edwards, co-founder and market consultant of Santos Springs. We offer grain marketing solutions to producers in multiple countries. Welcome to our W2H grain marketing channel. Go ahead and hit the subscribe button. I also recommend tapping the bell so you get future notifications. And if you like what you see, hit the like and share this video with other farmers who care deeply about their grain marketing. If you are a corn or soybean farmer, your revenue depends not only on your production, but also the answer to three simple questions: when, how much, and how you sell. One W, when, two H's, how and how much. Our W2H mentorship provides a clear, concise, and custom approach to answering each one of these three questions for your specific farm throughout the year. Before we start this week's content, it's always important to remember that trading in futures products entails significant risk of loss, which must be understood prior to trading and may not be appropriate for all investors. This commentary and the information contained within should be considered market commentary and reflect the opinions of the author. For those of you watching this with a delay, if you are a U.S. corn or soybean farmer and want to stop being held hostage by market uncertainty, let us teach you how to place each one of your bushels in a grain marketing strategy specifically designed to optimize your farm's revenue. Click on the link and we'll work together to see if our W2H mentorship is the right next step for your grain marketing. My name's Aaron Edwards with Santos Springs. It is July 15, 2025, and it is time for this week's market update and recommendations. As always, bias towards action. Let's start with the recommendation. See what work we need to get done. I'm going to go over the logic behind this a little bit later. So we'll just get the recommendation out of the way, then we'll jump into the analysis and I guess build the case, so to speak, for the recommendations. But recommendation number one, checking that box. Basis contract on 50% of Q3 corn. Use the December contract unless local bids favor other contracts. So the spread between September and December, it's way down in the dumps, which means, the September is pressured, basically. So unless you have a good bid, the September contract would basically have like maybe 6 weeks, 5-6 weeks before buyers are going to be rolling out of that. Maybe we get a rally in the summer. We're going to go over that in the analysis, but I would default to the December contract unless there is a reason locally to do another contract. And then the second recommendation is a basis contract on 50% of new crop corn. Use the December contract. And the third recommendation, check that box. We're going to exit a hedge and sell cash soybeans on 30%. So we made some hedges on beans. We locked in the futures. Futures is coming down. Basis is going up. On 30% of that volume of the Q3 soybeans, we're going to get out of the hedge, sell the cash on 30% of that. So those are the three recommendations for today. Let's jump into the analysis part. But before that, say picture paints 1,000 words. This image is, let me get it pulled up. There we go. This image is actually from a Brazilian website. It's called Notícias Agrícolas. That's a media company that I do a lot of interviews for down there in Brazil. I speak Portuguese fluently, but anyhow, this image is off their website. I believe this image is from the state of Mato Grosso. That's the powerhouse state. But there's so many pictures of corn piles outside of bins that if you just Google, corn piled outside in Brazil, you could probably pick up a bunch of images just like this. The point that I wanted to make, number one, Brazil doesn't have nearly enough storage capacity. Fine, that's their problem. But number two, it's the dry season. You can store corn outside. That's fine. But rains will likely pick up. And they all hope for rain in September to start planting. October is almost a certainty that there will be rainfall. I mean, as much as is possible, right? But These piles of corn, they need to be cleaned up soon. I just want that image. So yes, they had a bumper corn crop. What's interesting is we have old crop corn in the US, and then very soon we will have new crop corn in the US, and we have piles of corn in Brazil that need to get cleaned up. And I just, as we go into the analysis, I just wanted that mental image in your mind, because it's going to play into part of the recommendations. So, philosophy of work, market plan portfolio. We want the grain, we want your grain in different buckets so it's not all exposed to the same risk. And then based on that portfolio, there's recommendations, seasonals, funds, technicals. That's the philosophy we go about. And then that gives us the action plan. So in a nutshell, that's how we handle grain markets. Always just have that pyramid in every video. If you follow along on a regular basis, that's you'll be very familiar with that. We're going to start talking a little bit about soybeans. Let me get a marker pulled up here. See if we can get what color works. Blue would be nice. All right, so on the blue, the good news, if we want to think about it, the good news is the speculators are still long. They haven't started selling soybeans. The bad news, so to speak, is it's basically the smallest long position. They've just been coming out of their long position here over the last month, and they're just gradually getting out of their longs. So if this trend continues, we probably will see soybeans going net short. I'm not convinced that the fall on soybeans is over, so to speak. We'll look at it on a chart. Let me see, get a black marker here. There we go, black. So one way to look at it is, okay, we're in a value area. That's good news. That's good news, right? We're kind of in this value area where we haven't, only 2 times did we really dip below this. Maybe this is where beans turn around. The other way to look at that is speculators could still sell this, and if they do decide to sell, maybe we hold these bottoms, maybe we don't, but it could get, the situation on beans could get a little bit worse. So if you look back at the recommendation, we're getting out of part of our hedges because we have come down to a value area. We have seen basis pick up, but we're only doing 30% because if this trend continues and if beans continue to slide and basis continues to improve, we still want to have some powder dry to make those moves further down the road on the Q3 beans. Other than that, basically the sales, our recommendations are done. So in a nutshell, soybean markets, that's that, except I wanted to quickly point out basis. So let me see if red works on this. Red, there we go. Pull this to the bottom or to the side, maybe better. There we go. Basis levels get wonky often in this time, July and August, they get wonky. So we saw this big correction down, and then we're starting to see a pullback. So basically the idea is whatever average this is on basis, that's kind of what we want to be locking in. And there is a risk that that the bottom falls out of this. And if it does, and if the bottom falls out and we don't get this last bump in basis, we could be right back down here to these lows that we're not really that interested in. So the idea is just, okay, let's just get some base hits over the next few weeks, get out of those hedges, make those Q3 soybean sales to avoid this bad basis where it kind of goes back to harvest lows. What we don't want is to be holding Q3 beans for this big downfall here. So that image looks a little bit messy, but it's just a little bit of thought process behind why we're handling Q3 beans the way we are. With that, we will shift gears and go to corn. And the corn situation is, that's where it's been a exceptionally tough year, is on the corn market. So farmers, eternal optimists, let's stick with the optimism. If we want to be incredibly optimistic, we could say, hey, look, the speculators reduced their net short position here, so maybe they're done selling. Maybe this market turned around. I would not, don't bet the farm on it, right? But maybe we do have at least a short-term, low prices cure low prices. We've seen, why is corn so low? This makes no sense. oh, demand is picking up. So maybe that's a case of it, right? Maybe seasonality is coming a little bit sooner. Maybe we get a little bit of a bounce. Maybe the corn market's oversold and it's ready to stop throwing a fit. That is a possibility. To add to that narrative, wanted to point out here the trade, yesterday's trade on new crop corn, that big green bar, that's what's called a key reversal, where if you think of the previous day's candle, a key reversal would take out the previous day's high, take out the previous day's low, and close positive. So take out the high, take out the low, close positive. We had that yesterday on new crop corn. With technicals, it's always important to point them out. Maybe they will come to fruition. Always take it with a grain of salt. For me, we kind of look at technicals, we look at fundamentals, we look at buyers, sellers, big picture, and then we kind of lean into action based on all of those factors. So really good news, a key reversal on corn, that would point towards higher markets. That's good technical news, but I wouldn't take that with a grain of salt. And the reason is because there is still a lot of selling pressure. There's old crop corn that needs to be moved. There's new crop corn that needs to be sold. There's corn piles out of Brazil that need to be sold. July, August, September, probably rallies over the next, I would say, probably 10 weeks, but maybe 5 to 10 weeks. Rallies short term will likely be met with selling pressure because there's a lot of selling pressure over this market. A lot of farmers in both hemispheres that have corn that if we were to get a bounce, they would take advantage of it and sell. Personally, I think we would be hard pressed for a sustained rally shorter term in corn. I think this ping pong up, down, up, down. Now, I wouldn't bet on it, but maybe this key reversal is a sign that maybe to some extent the bleeding has stopped on the corn market. That would be good news. If we could just get corn sideways instead of down, that would be nice. Eventually we'll get a rally on the other side. Wanted to make sure I pointed that out. And then the next two images are really, the thought process is kind of why the basis recommendation. And the corn market's been tough, north to south, east to west, but I wanted to point out a few basis trends and a few basis things to watch out for. First of all, if we want to just think of the harvest, so this blue would be historic basis levels around harvest or shortly after harvest. And then if we were to think of that same period in the black, how it was last year, you could see, we had a lot of corn and basis levels were very low last year. This is Tippecanoe County, home of, West Lafayette, Purdue. And so that's the default basis I use. I'm going to show a Western Corn Belt basis as well as because this year we've kind of had a little bit different trends. But the thought process is, let's focus on the blue line, and I'm actually going to do this with red to really point it out. What we typically see with basis is low at harvest, slight increase after harvest, mainly sideways, and then it can get real wonky maybe in the spring or more likely in the summer. That's in a nutshell, if you just look at the blue. And if you look at what happened this year, now let's look at the black line. It was bad at harvest, got a little bit of a recovery, and then it was mainly sideways here. And then it got a little bit of a recovery and not really very much into the summer, but it is close to the better basis levels that it's ever been. So that's why we're writing basis contracts. The other reason we're writing basis contracts is September is not really all that far away. And at some point in time, seasonally, we would get this correction basically between old crop and new crop. And what we don't want is we don't want to store a crop for a whole year and then sell it as new crop the next year. That's low basis, right? That doesn't make sense. So it's better to move the corn now. And then you say, when should I move it? Well, historically speaking, not that historical trends have helped us out a whole lot this year, because it's been a very abnormal year, so to speak, on the corn market. But the latter part of July is typically historically the best basis level. So I think there's a decent shot that once we get past this thing, we'll start seeing this downfall. And we want to move Q3 grain before that, right? We don't want to be holding old crop corn in case we fall over. The trends and the patterns are more clear on here in the Eastern Corn Belt, but I did want to show the Western Corn Belt for no other reason, just show how incredibly disappointing it's been, and I wish I had better news on it, right? But historically speaking, very similar. You get this pressure downward once basically harvest is in place. Usually a little bit of a recover coming into Christmas, and then it's basically sideways until maybe you get a little excitement into the spring or summer. So basic trend is the same. The levels are different, but the basic basis trend is the same. And then we look at this year, and weak harvest basis, and it just stayed weak basically the whole year. If there is an interesting thing to point out, is that the widest gap between the historical and the current basis, or maybe not the widest, but it got real wide on that February rally. Basis just said, listen, there's too much corn out here for us to get excited on the cash market. I can't pay that much. And that basis gap got really wide. So maybe to some extent it's not as urgent in the Western Corn Belt to sell this, because it's not like we're anywhere close to having this drop off, maybe. But the flip side of that is you might as well sell it, because even if it's historically down here and you can move it up here, even if that's 15, 20 cents, even if it's a dime in a tight market. So the basis contracts, it might be a little bit stronger strategy in the Eastern Corn Belt, or if you have basis levels, but even if it's just a nickel or a dime better than your expected harvest basis, I still think it makes sense to go ahead and just get rid of that cash corn, so to speak, write that basis contract. So you're just worried about the futures. And we did get a key reversal yesterday, so maybe corn keeps going down. Maybe corn already bounces, but if corn bounces, I think the basis will likely just, if we get a rally in corn, I'm not sure cash prices will change that much. I think they'll probably just continue to plummet. And if corn goes down, maybe we do get a little bit better basis, but before too long, if corn's coming down, there's plenty of corn. You'll just see buyers prying the corn out of people's hands very cheap until that harvest corn is tucked away and secured in some way or another, I fear. So the shorter term, half corn to move, write the basis contract. That's the recommendation. Lock in the futures down the road. And let me stop sharing that. We'll go back to the summary and wrap it up for today. All right, let me share that screen. There we go. Seasonally, corn is neutral. Seasonally, soybeans are neutral. They're neither a buy or a sell. The managed money, the spec funds have sold enough corn that it actually justifies buying corn. The trend on corn is down. Speculators are still technically long on soybeans, but they're basically neutral, and the indicator would just say it's neutral. It's neither a buy or a sell. And the trend is down on beans as well. Corn basis levels in the Western Corn Belt did not really get a strong push so far this crop year. Corn basis levels in the Eastern Corn Belt followed seasonal patterns, but at weaker levels. Soybean basis tends to be volatile at this time of year. The strategy is to try to capture an average of strong summer soybean basis levels. December corn had a key reversal on Monday, July 14th trade. Time will tell if this is a head fake or an actual inversion in the market. Soybean prices have fallen to a value area and have not traded comfortably below current price levels. However, if speculators add pressure to the soybean market, it could fall more. It would be great to have better news of rallies and promising opportunities. But the big picture in my mind is that we are in an environment where there is plenty of grain in the world. And in the environment of plenty of grain, speculators get a little bit out of whack, sell, pressure markets down. But what happens is demand, low prices cure low prices. We've had plenty of headlines of friendlier demand. Demand does not seem to be a problem. So just with the harvest of double crop corn and friendly weather forecasted in the Midwest, it seems harder and harder to get a supply side story short term. That doesn't mean that we can't have a demand driven recovery once we can lift the selling pressure off these current markets. And I think what I'm watching is, when will farmers be done adding selling pressure to this, both in the northern hemisphere and in the southern hemisphere? When will farmers be done adding pressure? And when will speculators say, oh, there's not more selling pressure from farmers, I might be on the wrong side of the market, go from sell, sell, sell to buy, buy, buy. So markets will recover at some point in time. I don't really expect it to be in the next couple of weeks. Could be, but markets go down, markets go up. It's just not very much fun when they go down, and they go down more, and they go down even more. So hang in there, take care of your crop, keep farming. There will be opportunities in the future. Just don't get too down and out. Take care of a good crop. Take care of your field. Someday you'll be happy you have those bushels to sell. Have a great rest of your week.